Hello everybody. Firstly, I'd like to welcome you to this webinar where we'll be talking about the US dollar, particularly in the context of the trade war, the earnings season, and the current global outlook. Are we in for more of the same, or is there a recession around the corner? More importantly, what opportunities will appear for traders? My name is Sasha and I'm a financial analyst from the research department at ForTrade. If you have any questions, please call us and ask to speak to a senior account manager who will be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. Now, first off, we'd like to introduce you to what we call a market opportunity. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple to understand opportunity to trade on the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by the research department on a daily basis according to market conditions and based on historical evidence. This can relate to daily trading, weekly trading, or monthly trading. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point and support and resistance levels. It's important to understand that it's solely your decision whether you trade on market opportunities or not. So here's an example of a market opportunity. You can see fundamental analysis on what's going on with the pound-dollar currency pair. Below you can see some geopolitical events that can influence the currency pair, such as the resignation of the UK Brexit minister or positive employment figures in the US. It's important to look at the pivot point on which the calculations are based. If the price reaches this level that you can see on the screen, that's 1.2840, this shows the right moment in our estimation to come in and open a trading position, had you decide to trade on this particular market opportunity. You can see that this is a weekly market opportunity, although we have regular daily trading opportunities. You can see the trend direction here, which is down. It's important that you know how to use the stop loss and take profit options. You have support and resistance levels here. At these points you can put a stop loss and take profit, and on the right hand side of the page you have calculations. If you close the position using take profit, you can expect these kinds of profits at support 1, 2 and 3. If the price is going against you, then you can have a loss of the amount shown at resistance 1, 2 and 3, and that's in red. The pivot point then is the starting price based on which resistance and support levels are calculated. These support and resistance levels here are for daily, weekly or monthly terms. Finally, profit and loss calculations are based on a one-lot trading volume. So let's address the earnings season firstly, mainly in the context of the dollar. As you can see here, we are going to talk about the earnings season and the trade war and how do each affect or are affected by the dollar. So there isn't a hard and fast rule between earnings and the dollar. Generally, if earnings are higher than expectations, this tends to see the dollar lose value, while the dollar may move higher if earnings are below expectations. Why? Well, as we all know, a good earnings season will push stock prices up, and risk-on sentiment will dominate, as investors will rush to invest in shares. The earnings season kicked off earlier this week with the world's largest banks declaring. Will also have an impact on the US dollar as well as stock prices. What are the expectations for this earnings season? Well, quarterly earnings for the S&P 500 or USA 500 are expected to decline for the first time since the second quarter of 2016, even though the index is just 2% from its historic high. First quarter earnings for the S&P 500 are projected to decline 2.5% from last year, according to consensus estimates. Most analysts advise trading on stocks with caution, and if these estimates are founded, it might place some upward pressure on the value of the dollar, particularly, as I said, if company results are below expectations. The trade war is important due to the status of the US dollar as a safe haven asset. It is, after all, considered the world's reserve currency. Alongside gold, the traditional safe haven asset, relied upon during times of uncertainty, investors have moved their finances into the dollar, since they believe the American currency stands the best chance of maintaining value in the event of a global slowdown or trade war. Trade war tensions have calmed in recent weeks, but so far the US has imposed 3 rounds of tariffs on Chinese goods, totaling more than $250 billion. China responded with its own tariffs worth $110 billion. The two sides are now involved in high-level negotiations, and last week President Trump gave a 4-week time frame to conclude negotiations. In the meantime, trade tensions between the US and EU have escalated, with the US on April the 9th threatening tariffs of $11 billion on the Eurozone, and EU countries have promised to retaliate. Commodities such as gold and crude oil are also affected. The precious metal tends to increase in value in times of uncertainty, such as when trade war tensions are high, and goes down in value when investors are happy to take risks. Crude oil is more likely to fall in price if demand declines, and more likely to go up if demand increases. This means if economic growth is higher, crude prices will grow, while in times of a downturn, crude prices are more likely to fall. As a safe haven asset, gold has also been supported by trade war tensions and issues such as Brexit. The International Monetary Fund cut its outlook for global growth on April the 9th. The world economy will grow 3.3% this year, down from the 3.5% that IMF had forecast for 2019 in January, the fund said last Tuesday in its World Economic Outlook. The IMF cut its forecast for the US to 2.3% this year, down 0.2 percentage points since the IMF's last global outlook in January. For the moment, though, there are no signs of a recession in the US. Of course, the main factor influencing the price of the dollar is interest rates. If you're interested in how interest rates impact the dollar, please watch our regular webinar on the subject. But basically, a lower rate, or the prospect of lower rates, tend to push the dollar lower, and the prospect of higher interest rates tends to push the greenback up in value. The other regular event that moves the dollar is the non-farm payrolls, and again we produce a webinar on this topic. So let's take a look at where the dollar stands at the moment and over the past year. The dollar has grown in value by over 8.38% over the past year. The fact is that the US economy has been a strong performer over the past year, while many other countries have experienced an economic slowdown. The fact is that the US economy has been a strong performer over the past year, while many other countries have experienced an economic slowdown and have experienced declines in their national currencies. The dollar has been used as a safe haven by investors, looking to put their money in what is considered as the world's reserve currency, as I said. It's also no accident that trade war tensions increased in April last year, and by May the trade war between the US and China had begun, with the US placing tariffs on Chinese goods. You can see how the value of the dollar index jumped in this period. So let's take a look at the euro-dollar. The euro-dollar currency pair has fallen by 8.88% over the past year. This number reflects both the strength of the dollar and the weakness of the eurozone. The euro has been one of the areas suffering from the global slowdown and, as a result, has had to keep interest rates very low. As a result, investors prefer the dollar, particularly since the other major global currency, the pound, is so unstable due to the Brexit issue. So what are the prospects for the dollar? Well, last week the minutes from the latest Fed meeting was revealed, showing that a majority support keeping interest rates at their current rate of 2.5%. Still a low rate, but higher than the euro. In the context of the trade war, Treasury Secretary Mnuchin announced on April the 10th that the US and China have agreed to set up enforcement offices to monitor implementation of a trade deal. President Trump stated recently that he hopes to close a deal by the end of June. If this optimism continues and a deal between the US and China is signed, this might cause the dollar to decline in value. But unless the US economy also slows more quickly than expected, the effect on its own might not be so great. But if company earnings are better than expected and the US economy continues to perform strongly and a trade agreement is signed, this would support the dollar. On the other hand, a US-EU trade conflict could make the euro-dollar particularly volatile, potentially pushing it downward. In any case, in these times of uncertainty, turbulence is expected and traders should keep themselves informed and react quickly. Well, I hope you found this webinar useful. Of course, at 4Trade we'll be following all US dollar currency pairs and analyzing all factors that affect them. Please get in touch with your senior account manager for further information. Until next time, please join us at 4Trade again soon.